What if I told you XRP didn't just drop randomly? What if global politics, war tensions, and one man statements are quietly moving the entire crypto market? Right now, people are asking one serious question. Did Donald Trump just crash XRP? Or is this just another market illusion that smart money is already taking advantage of? Because here's the truth most people are missing. XRP didn't move alone, and what's happening behind the scenes is far bigger than just one coin. And by the end of this video, you'll clearly understand whether this is panic, manipulation, or a setup for something much bigger. Let's get one thing straight immediately because most people get this completely wrong. XRP did not crash because of Donald Trump directly. And if you believe that one man pressed a button and XRP dropped, you're thinking too simply for how markets actually work. What's really happening is a mix of global tension, political influence, and investor psychology. And XRP is just reacting to that environment rather than a single statement or action. Recently, crypto markets, including XRP, have been reacting to geopolitical tensions, especially involving the United States and Iran. And when these tensions rise, markets become unstable, not just crypto, but stocks, oil, and currencies as well. And XRP is part of that system, whether people like it or not. In fact, when Trump made aggressive statements about Iran and potential retaliation, markets dipped slightly, and XRP followed that trend with a small decline, not a crash, but a reaction, which shows you something important. XRP is behaving like a risk asset, not an isolated asset. Now, here's where people get confused. They see XRP go down and immediately connect it to Trump like it's a direct cause. But the data doesn't support that because in other situations, Trump's actions have actually pushed crypto prices up. For example, when he signaled support for crypto policies or mentioned digital asset reserves, XRP and other coins surged significantly, which proves the relationship is not simple or one directional. So, what's really happening is this: markets react to uncertainty, not just news, and Trump creates uncertainty whether through trade policies, war tensions, or economic decisions. And that uncertainty causes investors to move money around. Sometimes they move into crypto, sometimes they move out. And that's why you see mixed reactions. For example, even recently, after a ceasefire related statement, crypto markets actually moved up instead of crashing, showing again that Trump's influence can push prices in both directions depending on context. Another important point that most beginners ignore is that XRP had already been under pressure before any recent Trump related headlines. The asset has seen declines over time due to broader market corrections, not just political triggers. And in early 2026, XRP even dropped to around 144, its lowest level since late 2024, which clearly shows that the weakness was already there and not caused by a single event. So if you're trying to blame Trump alone, you're missing the bigger picture completely. XRP moves based on liquidity, institutional interest, regulation, and overall crypto sentiment. And politics is just one layer in that system, not the entire cause. The smarter way to look at this is not did Trump crash XRP, but instead, how do political events influence market behavior? Because once you understand that, you stop reacting emotionally and start thinking like someone who actually understands the market. And here's the uncomfortable truth: most retail investors lose money not because of bad assets, but because they react to headlines without understanding context. And this situation is a perfect example of that. People see fear, they panic sell, and then later realize the market never actually collapsed. It just moved the way it always does, based on larger forces that most people ignore. Now, here's where things get uncomfortable for most people because what you're seeing in the XRP market right now is not random movement. It's a pattern that repeats over and over again. And if you still think price drops are just bad news reactions, then you're exactly the type of participant smart money depends on to make profits. because while retail investors panic and sell, experienced players are watching the same situation very differently, and they are asking one simple question: where is liquidity sitting right now, and how can it be taken? When headlines connect someone like Donald Trump to market movement, fear spreads fast, and that fear creates volatility. But volatility is not a problem for institutions. It is an opportunity, because volatility allows them to enter positions at better prices. And more importantly, it allows them to trigger weak hands out of the market, meaning people who are easily influenced by news and emotion. This is exactly what tends to happen during politically charged moments, especially when global uncertainty increases, because retail investors interpret uncertainty as danger, while smart money interprets uncertainty as a setup. Let's break it down in a very simple way. XRP does not need a direct negative event to drop. It only needs hesitation in the market, and hesitation usually comes from confusion. And confusion is created by mixed signals. For example, one headline suggests rising geopolitical tension, another suggests possible economic shifts, and suddenly investors don't know what to do. So they exit positions to stay safe, and that exit creates downward pressure on price. But here's the catch: once price drops into key levels where liquidity is sitting, large players begin accumulating quietly, because they understand something that most retail traders ignore. Price moves toward liquidity, not logic. This is why you often see sharp drops followed by strong recoveries. And people call it manipulation without actually understanding the mechanics behind it. Because from a technical perspective, these moves are not random, they are structured. XRP often sweeps below support levels, triggers stop losses, creates panic selling, and then reverses, leaving most retail traders either out of the market or re entering at worse prices. If you're constantly reacting to news without understanding this structure, you're going to keep getting caught on the wrong side of the move. Another mistake people make is assuming that political figures directly control crypto markets, which is simply not true. Even someone as influential as Donald Trump does not have the ability to crash a specific asset like XRP on demand. What he can do is influence sentiment, and sentiment is powerful, but it's still only one piece of a much larger system that includes institutional flows, derivatives markets, macroeconomic data, and regulatory expectations. If you ignore those factors and focus only on headlines, you're basically trading blind. Now, think about this logically. If every time there is political tension and the market drops and then later recovers, what does that tell you? It tells you that the drop itself is not the end, it's part of a cycle. And within that cycle, there are opportunities for those who understand timing and losses for those who don't. This is why experienced traders don't panic when they see a dip connected to news. Instead, they analyze whether the move is supported by real structural changes or just temporary sentiment shifts. And here's where most people need a reality check. If you're entering trades based on headlines like XRP crashed because of Trump, you're already late, because by the time that narrative reaches you, the move has already happened, and smart money is already positioning for the next phase, which is either accumulation or reversal. The market rewards anticipation, not reaction. And if you're always reacting, you're always behind. So the real question is not whether Trump crashed XRP. The real question is whether you understand how these narratives are used to move markets. Because once you see that clearly, you stop being controlled by fear and start recognizing patterns that repeat again and again. And that's where things begin to change for you as a trader or investor. Now, we need to address the real question that actually matters, because everything so far means nothing if you don't understand this clearly. Is XRP actually weak right now, Or are you just being shown a temporary move that looks worse than it really is? And the honest answer is not comfortable because it sits in the middle. XRP is not as strong as blind supporters claim, but it's also not as broken as panic sellers believe. And if you don't learn how to separate those two extremes, you're going to keep making bad decisions at the worst possible time. Let's start with the uncomfortable reality. XRP has been underperforming compared to some other major cryptocurrencies during certain periods. And that's not something you can ignore or explain away with hype because performance matters. And if an asset is not showing consistent strength, you need to question why, not defend it emotionally. Part of that weakness comes from uncertainty around regulation and adoption, especially tied to Ripple Labs. Because XRP is not just a speculative coin, it is deeply connected to a company and its legal positioning. And that adds an extra layer of risk that assets like Bitcoin don't carry in the same way. At the same time, calling XRP weak without context is just as misleading because structurally, XRP has shown resilience in multiple situations where it could have collapsed completely but didn't. And that tells you something important. There is still strong interest in this asset at certain price levels, especially from participants who are looking beyond short term noise. These are not emotional traders. They are positioning based on long term expectations around cross border payments, institutional use, and financial infrastructure. Whether those expectations fully play out or not is still uncertain, but the interest is clearly there. Now, here's where most people get trapped. They look at short term price movement and assume it reflects long term value, which is a mistake because markets don't move in straight lines. They move in phases: accumulation, expansion, distribution, and correction. And right now, XRP appears to be somewhere between late correction and early accumulation, which is a very frustrating phase for most retail investors because it doesn't provide clear direction. Prices move sideways or with sudden spikes and drops, and that creates confusion. And confused traders make emotional decisions. Another thing you need to understand is that XRP's movement is heavily tied to overall crypto market sentiment, especially influenced by assets like Bitcoin, because when Bitcoin shows weakness or uncertainty, it pulls liquidity away from altcoins, including XRP. And when Bitcoin stabilizes or trends upward, that liquidity starts flowing back. So if you're analyzing XRP in isolation, you're missing a critical part of the picture. And that alone can lead you to completely wrong conclusions about strength or weakness. Now, let's bring this back to the main narrative. Did Trump crash XRP? By now, you should already see how shallow that question really is because XRP's current position cannot be explained by one event or one person. It is the result of multiple overlapping factors: macro conditions, market cycles, institutional positioning, and investor sentiment all moving at the same time. And if you reduce all of that complexity into one headline, you're not analyzing, you're simplifying to the point of being wrong. Here's the harsh truth most people don't want to hear: XRP is in a phase where patience matters more than excitement, and patience is something most retail investors don't have. They want fast moves, clear direction, and instant confirmation. And when they don't get that, they either panic sell or chase other assets. And that behavior is exactly why they miss the actual move when it finally happens. So instead of asking whether XRP is crashing or pumping based on headlines, the better question is this: are you looking at the structure of the market or are you just reacting to noise? Because if it's the second one, then it doesn't matter what XRP does next, you'll still end up on the wrong side of it. Now we get into the part that actually matters because analysis without forward thinking is useless. And most people spend all their time reacting to what already happened instead of preparing for what could happen next. So let's break this down properly, not with hype, not with blind optimism, but with realistic scenarios based on how markets actually behave. Right now, XRP is sitting in a zone where both bullish and bearish outcomes are possible. And if that sounds uncertain, that's because it is. Anyone telling you they are 100% sure about the next move is either guessing or trying to sell you something, because the market at this stage is waiting for confirmation, not giving it. The current structure suggests that XRP is building pressure rather than releasing it. And pressure in markets doesn't stay neutral forever. It eventually breaks either upward or downward, depending on where liquidity is strongest. Let's talk about the bearish scenario first, because ignoring risk is the fastest way to lose money. If XRP fails to hold key support levels and overall crypto sentiment weakens, especially if Bitcoin continues to struggle or move sideways without strength, then XRP can easily move lower, not because it is fundamentally broken, but because liquidity will be pulled out of altcoins. And when that happens, even strong assets drop harder than expected. Add to that any negative regulatory developments or macroeconomic pressure, and you have a situation where XRP could revisit lower price zones that most people are not mentally prepared for. Now, the bullish scenario is where things get interesting, because despite all the noise and uncertainty, XRP still has one major advantage that many other cryptocurrencies don't. It has a clear narrative tied to real world financial use through Ripple Labs, and narratives matter in markets more than most people realize because they attract attention, capital, and long term positioning. If positive developments come in terms of regulation, partnerships, or broader adoption, XRP can move aggressively upward. And when it moves, it usually doesn't do it slowly. It tends to move fast and catch most people off guard. Here's the part most people fail to understand: markets don't reward those who are right, they reward those who are positioned before the move happens. And that's why you often see price explode when the majority is still uncertain, because by the time clarity arrives, the opportunity is already gone. This is exactly why phases like the one XRP is in right now feel frustrating, because there is no clear signal, only clues, and those clues require patience and discipline to interpret correctly. Another critical factor you cannot ignore is liquidity cycles. When money flows into the crypto market, it usually enters through major assets first and then spreads into altcoins. And XRP is part of that second wave. So if you don't see strong movement yet, it doesn't automatically mean weakness. It can simply mean the cycle has not fully shifted. And jumping to conclusions too early is one of the most common mistakes retail investors make. Now, let's tie this back to the main idea again. Blaming someone like Donald Trump for market movement is a distraction, because it keeps you focused on short term narratives instead of long term positioning. And as long as you stay focused on headlines, you will keep reacting late, entering late, and exiting at the worst possible time. The reality is simple but not easy to accept. XRP is not giving you a clear answer right now. It is testing your patience, your discipline, and your ability to think beyond noise. And most people fail that test, not because the market is unfair, but because they are not prepared to operate without constant confirmation. So the real question moving forward is not, is XRP going up or down tomorrow, but are you positioned in a way that allows you to benefit from either outcome? Because if you are only prepared for one direction, you are exposing yourself to unnecessary risk. And in this market, that's exactly how people get wiped out. Now, let's bring everything together properly, because if you've been paying attention, you should already realize that the question, did Trump crash XRP, was never the real issue. It was just the surface level narrative that pulls attention and triggers emotional reactions. And if you build your decisions on surface level thinking, you will keep repeating the same mistakes again and again, no matter how many videos you watch or how many opinions you hear. Here's the reality you need to accept without excuses: XRP did not crash because of Donald Trump. And even if his statements influence short term sentiment, that influence is temporary, while the market structure, liquidity flow, and long term positioning are what actually control where price goes over time. If you keep blaming one person, one tweet, or one headline, you are avoiding the responsibility of understanding how the market really works, and that mindset will cost you money. What actually happened is much more simple, but also more difficult to accept. The market reacted to uncertainty, liquidity was taken from weak positions, and XRP moved accordingly within its broader cycle. And this cycle doesn't care about your opinion, your expectations, or your emotions. It only responds to supply, demand, and positioning. That's why you can see fear in the market while at the same time smart money is quietly accumulating, because they are not reacting to noise, they are operating on structure. Now, think about your own approach for a second. Are you reacting every time you see a headline, or are you stepping back and asking what's really driving the move? Because those two approaches lead to completely different outcomes. One keeps you trapped in short term panic, and the other puts you in a position to actually benefit from market cycles. Most people say they want to make money in crypto, but their behavior shows they are just chasing movement without understanding it. And XRP is one of the easiest places to see that pattern repeat. Looking forward, XRP is still in a phase where it can go either way. And that's not a weakness of the asset, it's a reflection of the current market environment, uncertainty, mixed signals, and shifting liquidity. And until those factors become clearer, you should expect volatility to continue, not disappear. That means sharp moves up, sharp moves down, and a lot of people getting caught in between because they are trying to predict instead of prepare. Here's the practical takeaway you can actually use. Stop trying to find one single reason for every price movement, because the market doesn't operate on simple explanations. It operates on layered factors. And the sooner you accept that, the sooner you stop making emotional decisions. Instead of asking who caused this move, start asking where is the opportunity within this move? Because that shift in thinking is what separates people who survive in this market from those who constantly lose. Also, understand this clearly. Patience is not optional in a phase like this, it is required. Because if you rush decisions when the market itself is uncertain, you are basically gambling, and calling it strategy doesn't change the outcome. XRP will eventually make a clearer move, either confirming strength or showing deeper weakness. But until that happens, the smartest position is not emotional, it is calculated. And finally, you need to hear this whether you like it or not. No video, no analysis, and no opinion, including this one, should be the sole reason you make a financial decision, because at the end of the day, you are the one taking the risk, not the person on the screen. This content is for informational and educational purposes only and should not be considered financial advice. Always do your own research before making any investment decisions. Understand your risk tolerance and never invest money you cannot afford to lose, because the crypto market is highly volatile and unpredictable. And while opportunities exist, so do significant risks. So make decisions based on logic, not emotion, and take full responsibility for every move you make.